Hey there, I'm Onam Agarwal, your companion through the complex world of taxation and law. I juggle numbers and laws as a chartered accountant and lawyer right here in the heart of India, New Delhi. During my client interactions, I have first hand seen the confusion and questions surrounding NRI taxation. That's why we are launching our non resident Indian series, starting with the cornerstone of tax laws, your residential status. We'll explore why it matters, what defines a resident versus a non resident under Indian tax laws, and the significant impact this status has on your tax obligations. So let's jump right in.
Kicking things off, let's tackle the big question. Why does your residential status even matter? Well, the answer is very simple. If you are considered a resident of India, the tax net encompasses your entire global income. That's right. Every penny you earn across the seven seas is taxable here in India. On the flip side, as a non resident, it's only the income that you earn within Indian borders that goes to the tax net. The difference is big and can significantly affect your financial planning and tax liabilities. So, what exactly makes someone a non resident in the eyes of Indian tax laws? It's simpler than you might think. According to Indian tax laws, if you are not a resident of India, you are tagged as a non resident Indian or NRI. So, the essential question is, what exactly counts as being a resident? Your residential status is all about timing, specifically, how many days you spend in India during the financial year, which stretches from April 1 to 31st March. Please note, it's the financial year which matters. Then there are two key rules to remember. Rule number 1. You spend 182 days or more in India in the current financial year and you are a resident for this financial year. Rule number 2. If you are in India for at least 60 days in current financial year and in the previous 4 years you had spent a total of 365 days in India, then guess what? You again are in the residence club. So either of the two conditions, if you are satisfying, you are a resident. Let's put this into perspective with Mr. USA's story. He decides to spend 182 days in India during FY 23-24. Now, according to our tax laws, he is a resident for financial year 23-24, making his worldwide income subject to Indian taxes.
But wait, there's an interesting twist for Indian citizens or persons of Indian origin. This twist is related to your income. If your income from India crosses the threshold of rupees 15 lakh rupees, then the rule changes. Now, just 120 days are required to make you a resident of India. And in case you are earning below 15 lakh rupees, you are back to the 182 day rule. So, to effectively summarize this entire saga of residential status, you will be considered a resident of India in the following cases. Number 1, anyone, whether you are a foreigner or an Indian citizen. If you stay in India for more than 182 days in this year, you will be considered a resident for the year. In case a foreigner stays in India for 60 days in the current year and 365 days aggregate of the previous 4 years, then you will be a resident too. Number 3. In case you are an Indian citizen or a person of Indian origin who is living abroad and you are on a visit to India. In case your income from other than foreign sources is more than 15 lakh rupees and you happen to stay in India for more than 120 days in the current year and the cumulative stay in the last 4 years was 365 days or more, then you are a resident but not ordinarily resident. Number 4, if your income from other than foreign sources, in case it's up to 15 lakh rupees in the current year, but your stay has reached or crossed the threshold of 182 days, you are a resident. Lastly, the fifth point is an overriding provision which is above all the provisions. If you are an Indian citizen and your income from other than foreign sources exceeds 15 lakh rupees during the current year and you are not liable to tax in any other country or territory, then irrespective of the days spent in India, you will be considered a resident. Please note this provision is not applicable to persons of Indian origin. So as we can see, your residential status can make a lot of difference to your income which is taxable in India, and getting a good understanding can save you from tax headaches. If you found our video useful, then don't forget to hit that subscribe button for more insider tips and tricks tailored for the NRI community. I am Onam Agarwal and I am thrilled to be part of your financial journey, and I am eagerly waiting to share more insights in our next video. Until then, stay informed, stay savvy, and let's make NRI taxation easier together.